boy am I excited about this one. So lately there's been a lot of hype around stock splits. We've heard a lot about Apple, we've heard a lot about Tesla, and we've seen them go historically super high in the past weeks. But how can you actually invest in them without having a super huge amount of risk? You see, Tesla has gone from about $300 all the way up to over $2,000 just in the past 4 months alone since this pandemic really started to take over America. So that's a lot of volatility. You gotta think that is a 4 to 5 times increase in what the stock was before. So how can you hedge your associated risk while still investing in a great stock or company like Tesla? Now, when it comes to stocks like this, the easiest way to hedge your associated risk with your investment is going to be through an index fund or a sector ETF. So I know index funds can be a little boring and a little bit repetitive because I talk about them in almost all of my videos, but they can be extremely valuable in your portfolio. Did you know that over half of all US invested assets are actually held inside of an... man, I messed that all up. Jeez. Over half of all US stock fund assets are now actually invested in exchange traded funds. So you might be wondering why Tesla has actually been popping off so much lately, and that's because they just had their 4th consecutive quarter of growth. So since Tesla just had their 4th consecutive quarter of growth, they're actually eligible to enter the S&P 500. This will actually expose them to a huge amount of investors since, like I just said, the majority of US stock assets are actually held in exchange traded funds. So if you get a S&P 500 ETF or you get an actual like whole market ETF that has something like Tesla in it because it's now in the S&P, if it mirrors the S&P, then guess what? Tesla's going to be in there and you're going to make money off of Tesla. So you might be thinking, Christian, what do I have to do to get this awesome exchange traded fund that has Tesla and more groundbreaking stocks? Well, all you gotta do is smash that like button. Dude, who am I becoming? So in my last video, I talked a little bit about the ARK ETF or the ARK Innovation Exchange Traded Fund. So they actually are trading at about $89 right now, or at the time of me filming this video. Their 52-week low is about $33 and their 52-week high is about $91.90. Now, what does that mean? Well, that means that in the last year, they went from being about $30 all the way to triple their value up to $90. But how did they do that? Well, they actually have a significant holding in Tesla. About 10% of the actual ETF is centered around Tesla stock. Now you might be thinking, wait, they tripled their value just from Tesla? Well, that's not entirely the case. Yes, they are a little bit overweight with Tesla, but they do have other great companies such as Snap, Square, Roku, Slack, even Spotify. So like I said in my last video about index funds, this is a basket of stocks. So you have multiple stocks all in one, and you're going to be able to hedge your associated risk with your investment because you're not investing in a single company like just investing in Tesla. Because imagine this, Tesla has, nothing but negative quarters again like they did in the past before whatever happened in 2020. Imagine they have negative quarters again and then they get delisted from the stock exchange. Well, if you invested all your money in Tesla and their stock goes all the way back down to like maybe $100, you would lose a significant portion of your portfolio and you'd probably be really upset. So the easiest way to stop all of that from happening and to stop yourself from having the investing blues is going to be to hedge your associated risk with your investment through investing in an actual exchange traded fund. So ARK does actually pay a dividend. They have a very low yield though at about 0.42%. Like I said, this is an innovation focused ETF, so it's going to have more of a growth aspect centered to it instead of more of a dividend paying aspect. So when you look at ARK versus the S&P 500, ARK has been a huge outperformer versus the S&P 500. So like I said, they're up 31% year to date versus the S&P 500 6.59%. So that is a huge difference in growth right there, just because this is a fund that's focused around nothing but growth centered stocks. You don't have a list of 500 different stocks weighing this ETF down. You only have about 30 or 40 different stocks that are all, like I said, going to be growth centered and oriented stocks. So this ETF is just going to keep growing as long as those companies keep outperforming the market. So in 2017, they paid a 48-cent dividend, and in 2018, they paid a $1.16 per share dividend. That is more than triple what it originally was. So you can see that not only are these companies extremely profitable, but they're actually going to keep paying you in dividends. Yes, it's not going to be a huge amount, but you're still going to be getting the growth from the actual associated stocks, so it kind of equals out. So ARK is a lot more than just one ETF. ARK Innovations covers a bunch of broad sector ETFs. I believe they have about 10 or 11 different ETFs. So another great ETF I want to talk about real quick that will help you invest in Tesla while also hedging your associated risk is going to be ARKW, or the ARK Web Fund. So this fund is full of awesome tech giants such as, once again, Tesla, Twitter, Amazon, and even Nvidia. There's so many more stocks, but that's just a few of the huge names that are already inside of this fund. So you guys know how I am. I like to give you guys options. I wanted you to have more than just one fund that you could actually invest in throughout this video. So we're going to give you guys ARK, ARKK, and ARKW, which are both innovation focused ETFs. One is a little bit more focused on full innovation. The other one is focused on web-based and technology innovation. Real quick guys, I'm not affiliated with Robinhood in any way. However, if you are looking to start investing or just want to get your first stock for free, all you have to do is go to the description and use my referral link and get your very own free stocks such as Microsoft, Visa, GE, Ford, and many more. Robinhood is completely commission free and the sign up process takes less than 10 minutes. So like I said, ARK has incredible long-term growth potential because all of their funds are not only actively managed, but they also have incredibly volatile stocks that are extremely profitable. Man, I didn't even notice that I was just kind of throwing my cards up there and you guys could totally see that. I'm just gonna put that right over there. So you might be wondering what's the difference between an actively managed fund and a passively managed fund. So basically that just means that ARK is gonna have a team of analysts for each one of their funds that will go out and pick individual stocks that are not only groundbreaking, innovative, but also extremely profitable. They only pick the best stocks. That's why they only have a handful in each of their exchange traded funds. So guys, there you have it. Thanks so much for watching today's video. If you enjoyed, please make sure you smash that like button and subscribe for more uploads. Hope you guys all enjoyed, and I will see you in the next upload.